In this video, we're looking at Google stock, or more technically correct, Alphabet. So Google recently reported their fourth quarter earnings. So we will look at this report, we will look at their revenue, their earnings, and their free cash flow. And then we will try to come up with a fair value of Google stock. We will use two valuation methods. We will use discounted earnings per share method and free cash flow yield method. Ultimately, we will decide if Google is a good buy at this price level. So let's get started. First of all, if you want to get updates on Google stock or other investment ideas, for example, soon Warner Bros. Discovery will report their fourth quarter earnings. So if you want to get updates, you can subscribe by pressing the button under the video, and you will not miss a single new video. Okay, so Google reported their fourth quarter earnings. They reported $76 billion in the fourth quarter, so this is lower than expected. This implies only 1% growth rate year to year, but this is 7% growth rate in constant currency, so not as bad as it seems. So this implies $283 billion for 2022 year, and analysts are expecting for the revenue to be more than $300 billion in 2 years. So this implies low double digits of revenue growth rate in the next 2 years. So yes, the revenue growth rate is slowing down this year, but the growth rate will continue in the next 2 years. So again, not as bad as it seems. We also saw the decline in revenue in YouTube ads and Google Network, but advertising spendings may be cyclical, so this trend may not continue in the future. An important thing to note here is that if we look at the earnings by segment, we can see that Google Cloud is still growing around 30% per year, but it's still unprofitable. But they are losing much less money than in the previous quarter. And the same thing we can say about other bets. So these two segments are not yet profitable. But again, this may change in the future. Okay, what about competition? For example, can ChatGPT be a competitor for Google? In many ways, it provides even a better answer than Google search, and in a very conversational way. I believe at this point ChatGPT does not compete with Google. Also, a lot of products can be monetized through ads, and Google is much better at serving ads. So at this point ChatGPT cannot be a competitor for Google, but again, this may change in the future. Also, Google is buying back the shares at around 2% per year. The rate was higher in the previous periods, but it is very likely that it will continue at around 2% per year. As Warren Buffett famously said, if they keep doing that, I'll be the last shareholder. Okay, let's update our fair value calculation. First, we need the growth rate. So what kind of growth rate can we expect in the next 5 years? I was able to find analyst projections for the next 2 years. According to these projections, the growth rate in earnings will be around 13% per year for the next 2 years. We also need the price to earnings. We will use price to earnings of 26. This is in line with price to earnings were during the last 5 years. Also, this is double the growth rate. So this is something that was used by Peter Lynch in his book Up on Wall Street. Okay, we have the growth rate. We have future price to earnings. Let's make the calculations. What we basically do is that we take current earnings per share, grow them using the growth rate of 13%, multiply by future price to earnings of 26, and then discount them back to today using the required rate of return of 10%. As a result, we get the fair value of Google stock of close to $142 per share, which implies around 35% upside from the current price of $105 per share. So according to this metric, the stock is around 35% undervalued. Okay, let's use another method. Let's use free cash flow yield method. So this is something that I learned from Terry Smith. He uses a similar metric in his analysis. So what is free cash flow yield? This is next 12-month free cash flow divided by current market cap. So this is next 12-month free cash flow according to analysts. So if we look at the average free cash flow yield for the last 5 years, for Google it is close to 4%. Currently it is close to 5%. So according to this metric, the stock offers around 23% upside. Okay, so let's take the average between the two methods, the discounted earnings per share method and the free cash flow yield method. So if we take the average, we get the $136 per share, which implies an upside of around 30%. Okay, so we looked at Google stock. We looked at the recent 10Q report. If we use discounted earnings per share method, we get the upside of close to 35%. If we use free cash flow yield method, we get the upside of close to 23%. So according to both methods, the stock is significantly undervalued. Also, if you want to know more about other stock investment ideas, here is a video on Warren Buffett discovery, what to expect in the fourth quarter report. If you are not subscribed to the channel, you can use by pressing the button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.